ruang UPMF ya. Ruang UPMF itu adalah ruang unit penjaminan mutu fakultas. Sekretaris dekan juga di sebelah sana. Dan di sana ya itu ada ruang rapat di sebelah sana. Sebelah sini ada ruang rapat kami ya, dilengkapi dengan LCD interaktif ya. Kemudian juga ada ruang wakil dekan ya, kemudian ruang sidang. Ruang sidang kami siapkan untuk paralel ada 4 ya, karena kami sistemnya sidang untuk kompre, untuk sidang skripsi itu adalah sistem panel. Jadi kami siapkan 4 ruangan khusus. Kemudian kami punya ruang seminar yang model teater, yaitu bisa sampai 72 ya. Itu pun sangat fungsional, bisa digunakan oleh berbagai kegiatan. Dan pada akhirnya kami memiliki auditorium. Kami punya 2 auditorium, 1 utama dan 2 adalah media. Auditorium utama kami itu mampu menampung lebih dari 800 pengunjung. Dilengkapi dengan ruang diskusi, dilengkapi dengan ruang tunggu, dilengkapi dengan audio system yang sangat canggih ya. Itu ada di lantai 4 gedung manajemen. Di samping itu kami juga punya auditorium media. Itu sampai kapasitasnya sampai 300. Tidak kalah canggihnya dengan yang utama karena dilengkapi dengan audio system yang canggih ya. Dilengkapi juga dengan ruang tunggu VIP. Nah, inilah sarana prasarana yang bisa diberikan oleh Fakultas Ekonomi. Semuanya untuk meningkatkan pelayanan kepada mahasiswa. Semuanya untuk memberikan nilai tambah kepada bukan hanya Fakultas Ekonomi, Unpad, Universitas Pakuan, tapi tentunya adalah kepada masyarakat secara umum. Terima kasih. Wassalamualaikum warahmatullahi wabarakatuh.
The Faculty of Business, Economics and Social Development offers a few undergraduate bachelor degree programs, one being the Bachelor of Management Marketing with Honors. The Bachelor of Management Marketing with Honors program is accredited by MQA, Malaysia Quality Assurance. This program is for students who want to reinforce their knowledge and expertise in marketing. It is designed to meet social responsibility by providing a trained workforce tailored to market demands. Learning and teaching sessions are conducted by friendly academicians as well as industry thinkers. Our program objectives are to deliver and provide understanding and marketing concepts and principles, to apply management and marketing competency in planning, identifying, analyzing, and evaluating problems, to produce ethical, professional, and confident graduates. We offer state-of-the-art facilities in our classrooms that are required to equip them for the Industrial Revolution 4.0.
We also offer massive open online courses, MOOCs, as well as online on-site hybrid courses for the students to experience different types of pedagogy and assessments.
Our campus offers students a conducive and resort-like place to study. Our campus is strategically located on the coast of the South China Sea, and it is only a short drive away from Kuala Terengganu waterfront heritage city. Undergraduate students have the opportunity to experience a variety of sports every month, organized by the Students' Marketing Club,
Marcy,
and other clubs in the university. Undergraduate students are able to access tools, practices, and environments that are not available at the university on field trips. The exposure to community outreach programs is one of our strengths. Undergraduate students provide meaningful service-based activities to local communities that might not otherwise have access to the services. So hurry! Reserve your place for upcoming intakes by applying today.
Assalamualaikum warahmatullahi wabarakatuh. Bismillahirrahmanirrahim. Selamat pagi, salam sehat selalu semuanya. Okay, it's an awesome morning. I'm Vera Mitania, back to welcome you into the third guest lecture series as an implementation of our partnership and place of sharing knowledge station between us. Untuk semua rekan-rekan, baik dari Fakultas Ekonomi Universitas Pakuan, kemudian dari Universitas Trisakti, dan Sekolah Bisnis IPB, serta rekan-rekan mahasiswa dari Universitas Malaysia Terengganu. Bagi yang tidak bisa bergabung pada pagi hari ini, bisa bergabung melalui channel YouTube atau streaming di Instagram kita ya. Nanti saya akan tuliskan di bawah di channel-channel mana kalian bisa menyaksikan acara ini. Selamat pagi juga untuk semua rekan-rekan yang sudah hadir pada pagi hari ini. In this session, we will talk about financial management in Indonesia and Malaysia. For economists and industrialists, this is a hot issue, yeah, and we should improve this knowledge to make a right decision developing our or their business. So in this session, we invited a right person who have capability to share and talk about our topic in this morning. Allow me to greet Dr. Hendro Sasongko, aka MMCA.
Halo Vera.
Thank you Bapak. Waalaikumsalam warahmatullahi wabarakatuh. He is Dean of Economic and Business Faculty of Fakultas Universitas Pakuan. Bapak, can't wait to hear your presentation, Pak. This is always some issue, a great issue, Pak.
Thank you.
Yeah.
Okay, hello. Assalamualaikum warahmatullahi wabarakatuh. For everyone, especially for Professor Muhammad Safwan Nur, yeah. Proud to be your partner in this session, Prof. I'm Hendra Songko. I'm lecturer of business Faculty of Fakultas Ekonomi and Business, Universitas Pakuan, and also Dean of FEB. Yeah. My topics, I will bring the main topic is financial analysis model. Why? Of course, yeah, for student, yeah, especially in finance, yeah, it's important for them to understand and to refresh their knowledge, what concept of capital budgeting, and then how to calculate net present value, internal rate of return, yeah, in terms of as a parameter of feasibility, and how to utilize them, yeah, in terms of financial decision. I think this is my topic, Vera. Yeah, thank you.
Bapak. Yeah, Bapak. Thank you, Bapak. And I want to greeting second speaker, Associate Professor Dr. Safwan Muhammad Nur, MMIM, IRFP. He is Head Financial Market and Corporate Governance, RIG, Faculty of Business, Economic and Social Development, University Malaysia Terengganu. Good morning, Prof. Good day, Prof. Nice to be here listening your topics.
Okay, morning. Assalamualaikum all, and many thanks for inviting me to join. Firstly, sorry, I was a bit late. I had some difficulty actually joining this session using my browser, but everything is fine now, and I have to thank Dr. Farah as well who helped me.
Okay, thank you, Doc. And I want to greet all my colleagues attending this session, especially Mr. Khaidir. Good morning, Mr. Khaidir. Beliau adalah Wakil Dekan 1 di Fakultas Ekonomi Universitas Pakuan. Dan juga seluruh rekan-rekan yang telah hadir pada pagi hari ini yang tidak dapat kami sebutkan satu persatu. This webinar will moderate by Mbak Salsa Dila, SAMM CWM. She is lecturer of School of Business, Institut Pertanian Bogor. Halo Mbak Salsa.
Halo, selamat pagi Mbak.
Pagi. This is our first meeting ya, after my thesis consultation session ya.
Yes.
Mungkin untuk teman-teman yang hadir pada pagi hari ini sekedar cerita aja bahwa sebelumnya saya dan Mbak Salsa tuh saya sering konsultasi ke beliau waktu dalam masa perjuangan tesis saya di IPB beberapa tahun yang lalu ya Mbak.
Iya Mbak.
Luar biasa. And the second moderator is Mbak Wahyuni Rusliana Sari, SAMM. She is lecturer Faculty of Economic and Business Universitas Trisakti. Halo Mbak Wahyuni.
Hello, good morning everyone.
Gimana Mbak? This is our first meeting too ya Mbak?
Yes, it's our meeting.
Okay, hoping someday we will do research together Kak, Mbak.
Yes, sure.
And last but not least, I wanted to say big thank you to all the participants attending this webinar from Fakultas Ekonomi Universitas Pakuan. Terima kasih para mahasiswa yang sudah hadir, student of University Malaysia Terengganu, student of Sekolah Bisnis IPB, and student of Universitas Trisakti. Okay, I want to announce that you all guys could follow this webinar through our YouTube channel at Unpak TV and Instagram account at Unpak. Yeah, and I want to remind you, don't forget to fill the absence to get your certificate, and we will text in chat room. So you can fill and absent there. So I positive that you want to start the lesson immediately. So please the moderator to open the session. Silakan Mbak Salsa, Mbak Wahyuni.
Baik, thank you Mbak Mita for welcoming us to this guest lecture. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam.
Okay, distinguished guests, ladies and gentlemen, good morning and a very warm welcome to all of you here, and also to one of the organized Faculty of Economics and Business, Universitas Pakuan, on the guest lecture series number 3, in the topic of financial management. Firstly, I also would like to welcome to all the speakers today, Bapak Dr. Hendro Sasongko, AKMMCA. Assalamualaikum Bapak.
Waalaikumsalam warahmatullahi wabarakatuh.
Also, Associate Professor Dr. Sahwan Muhammad Nur, MMIM, LFP, from University Malaysia Terengganu. Welcome, sir. Thank you for your presence in this lecture series. We are so glad you could be here today to share your insights. So, before we start the lecture, we will have a photo session for today's documentation. So please turn on your video for a while, and the committee maybe will help us to take some pictures. Thank you. Okay. Please open the video so we can have a photo session together. All right. Thank you. So because maybe there are hundreds of participants joining this room, please be patient, while committee taking for our picture. Okay, maybe starting from page 1, 1, 2, 3. Okay, and then for the next page, 1, 2, 3. Okay, next page, 1, 2, 3. And one more time, 1, 2, 3. Okay, great. Thank you, everyone, for the photo session. And now I will give it to Ibu Wahyuni.
Yeah, okay. Thank you. Today we will have a great Professor, Associate Professor Dr. Safwan Muhammad Noor, MMIM RFP, who will present research in investment, a primer and methods. And Dr. Hendra Sasongko, aka MMCA, will bring us to the next topic, financial model analysis. Each speaker will be given 60 minutes for delivering their presentation. And for the participant, after the speaker's presentation, there will be a discussion session for 20 minutes. Please use the raise hand feature in Zoom meeting or drop off your question in the chat box. We already have the speaker here, and allow me to inform you of the short biography of the speaker. Dr. Safwan was born in Brighton, England, and currently serves as Associate Professor of Finance at University Malaysia, Terengganu, Malaysia, and Research Associate at the Victoria Institute of Strategic Economic Study, Victoria University, Australia. He is also RHB, Islamic Endowed Scholar of Finance, the first industry-sponsored endowed position at UMT. He holds a PhD in Finance from Victoria University, Australia, Master of Financial Analysis from La Trobe University, Australia, Bachelor Honours in Accounting and Financial Study from the University of Central Lancashire, United Kingdom, and a registered financial planner. Dr. Safwan has both industry and academic experience. Currently, he supervised several PhD and MSc students at UMT. He has appeared several times in national TV, namely RTM TV1 and Bernama TV. He was also featured in newspapers such as Sinar Harian and The Star, and has published an article in a leading financial magazine. He's actively involved with several programs, including as lead speaker for the National Financial Literacy Webinar by the Ministry of Education Malaysia, and was appointed speaker at the InvestSmart and Sharia Financial Planning Workshop. His industry and professional background include positions as director, financial planner, and stock market dealer of finance company licensed by Bank Negara Malaysia and Security Commission SC. In total, he has experience monitoring, evaluating, managing funds, and investment worth hundreds of millions. He was also board member of the Malaysia Financial Planning Council. As a practitioner, he had capital market license with SC and the mutual fund and private retirement scam license with the Federation of Investment Manager Malaysia. In research, Dr. Safwan's main interests are in investment strategy, portfolio optimization, and market efficiency. His articles are published by reputable publishers such as Elsevier, Emerald, MGPI, Inner Science, Sage and Rhetoric, Taylor and Francis. His papers appear in Web of Science and Scopus, including Q1 journals such as Sustainability, Economic Modeling, International Review of Economics and Finance, Journal of Economic Study, Mathematics, Economic Research, and PCKA. He has received Best Paper Awards, with one award more recently for his research in Economophysics at an international conference sponsored by CIMB Bank, Stock Exchange of Thailand, and Elsevier. In terms of academic leadership, Dr. Sahwan served as editorial board of Scopus and Web of Science Index Journal and article editor for a Q1 journal. He has reviewed paper for top tier and Q1 publication, including expert system with application, economic modeling, finance research letters, IEEE access, PCKA, research policy, and Search Open. In short, he has reviewed paper for Web of Science Q1 top tier finance, economics, mathematics, and artificial intelligence journal. In recognition of his review excellence, Dr. Sahwan earned 3 Outstanding Reviewer Award by Elsevier. Okay, without further ado, let's start to the next session. Dr. Sahwan, the time is yours.
Thank you, Mrs. Wayuni. And again, thanks again to all. I'm sorry, I have some issue with my webcam as well, but I believe the PowerPoint screen sharing should be fine. This is also actually the first time I'm presenting using Zoom. Most often here, I use Webex, Google Meet, or to a less extent, I use Microsoft Teams. Although I have joined Zoom sessions before, this is actually the first time as a presenter. So if you can't see some of the screen, for example, that I'm sharing, please let me know. Yeah, I'm trying to share the screen now. The window and can you see my screen here?
Yes.
Yes, okay, that's fine. All right, so for today, I'll just be briefly presenting on the research in investment. Basically, what are the things about the some theory topics, and of course on the primer, which is just some background on the methods being used for research in investment. A quick outline of my presentation. The first part is I'm going to cover on the research in finance and investment itself. So what I'll do is I'll just explain some of the related theories and topics, some key important concepts, as well as some example, which we will go through together to see how far that you can understand the topics in finance. I was informed by the steering committee that postgraduate students are also attending. I believe this is correct, right? So it is also important for the students to really understand the areas in finance and investment. Next, I'm going to proceed with the primer on investment methods. Specifically, I'm going to focus on fundamental analysis, technical, and finally, portfolio diversification. Of course, whenever we have the investment methods and we try to use this technique for investment, we need to be able to identify the performance of those methods as well. So what I'll do next is I'm going to discuss a bit on the investment risk and returns, as well as some testing for hypothesis, for example. And finally, we're going to close with some case studies and some of my related publications in this area in case that some of the students or audience would like to expand or extend on my research, or maybe criticize and quote and cite as well, or where relevant. All right, I'll just move the Zoom there. Okay. So some of the theories, important theories in research and finance, specifically on investment theories, include efficient market hypothesis. Now, this is possibly the most important theory, not only in finance, but also in other research, including accounting as well. So what happens is a Nobel Prize winner, Nobel laureate Paul Samuelson, used to say that finance or financial economics is actually the crown jewel of social science. So we know social science, we have many fields, right? Like accounting, business, human resource, marketing, and so on. So what Paul Samuelson, again, he is a Nobel Prize winner, said was that the finance is actually the crown jewel or the most important topic or area in social sciences. And according to Prof. Lu from MIT, efficient market hypothesis actually is important. It's like half of those finance importance can be credited to the efficient market hypothesis. So this is a very important topic, and this one applies to practice as well. The next one is actually modern portfolio theory. This one is on the diversification. And then we're going to have capital asset pricing model, EPT, prospect theory, and rational expectations theory. So these are some of the other theories which are also relevant for investment.
Dr.
Now, what
Sahwan,
about the topics? Yes?
the screen still on the slide one?
Yeah, it's still in slide one, yes.
Okay. Yeah.
To be on the safe side, maybe I'll just use this pointer. Okay, so you can see we are talking about the same thing, yeah?
Yes, now we are discussing an overview.
Yes, that's right. Okay, so you can see the theories, right? And then on the left-hand side here, because I'm not sure if the audience can see this same slide, very few examples of topics. Can you see this one?
Sorry, sir, the screen is not moving.
Is it on the theories and topics? I mean, the heading is research in finance and investment, and on number one, is it the same?
I think it's still on the first slide, research in investment, a primer on methods.
Oh, okay, all right. Wow. So this is quite weird. So how do I sort this out? Just a sec here. So you didn't see the presentation outline as well, is it?
Not yet, sir.
Okay, that is weird. Okay, let me just stop sharing first, and then I'll try to do it again. Maybe I'll just share the entire screen. Yeah, I'll try to do that first instead of the window. Okay. Okay, can you see the presentation outline?
Yes, presentation outline.
Okay, now you can see it. So what it means is that I have to share the whole screen instead of the PowerPoint window. It's all right. Just very quickly, like I mentioned earlier, I'm going to go through this particular first one, research in finance and investment, some topics, areas, and so on. And then I'm going to go through the primer on investment methods, followed by some performance measures here, as well as reference. To be on the safe side, are you seeing the same slide, the yellow colored one?
Yes.
Okay, that's good then. So yeah, thank you, moderator, for letting me know. Yeah. So these are again the investment theories that I discussed earlier, and some of the few examples of topics in investment that perhaps some of the students that are attending, or even some of the researchers interested in pursuing. So for example, equity and Bitcoin returns forecasting. One can also explore the asset allocation across some Sharia compliant financial instruments or across different countries. One can also explore hedging, like using gold or cryptocurrency, as well as performance of mutual funds and equity markets during this current health crisis. So these are some of the key concepts and knowledge that one should be able to grasp to really do research in finance, especially investment. Now, the first thing is, of course, time value of money. I'm sure most of the audience here come from the business and especially finance background, I assume. So time value of money is a very important concept as well. Risk and return is another thing, as well as financial models. Now, in order to do research, obviously one has to also understand data analysis. Of course, before you can do data analysis, you have to have the data first, isn't it? So you have to make sure that you download data from reliable and reputable database, such as Bloomberg, CompuStat, what else? DataStream, and so on. All right. So even the free ones are fine, such as Yahoo Finance or Google Finance, and I have seen quite a number of papers actually being published in good journal, top tier Q1 journals, as well as reputable publishers such as Elsevier and so on, which uses this free data, such as Yahoo Finance. So it's fine, yeah. Especially because I don't think lots of universities have access to this financial database because they are quite expensive, especially Bloomberg. DataStream is a bit cheaper. If I may ask, the moderator perhaps, do you have access to Bloomberg or DataStream at your university?
Not.
Okay, it's the same. We don't have it as well. So that is quite unfortunate because we can have lots of data. And believe me, there's thousands or hundreds of thousands of data actually. But it's all right. We just make do with what we have and maybe consider collaboration, for example, in order to have access to some of the data. So some of the knowledge that is required in order to do data analysis is obviously time series. This one really, what we can say is directly affect research and investment. You're going to have cross-sectional panel data, some econometric modeling, and other knowledge as well. Of course, one has to see the statistical significance of the findings as well. So obviously one has to know the relevant assumptions, sampling technique, the correct hypothesis testings, and so on. Now, the next one is very important. This one is on mathematical knowledge. Finance, especially investment research, are getting more and more mathematical nowadays. If you read some of the top tier finance journals, such as Journal of Finance, Journal of Quantitative Finance, and the similar journals, some of the formulas are quite complicated or very complicated, I would say. I remember one of my master's lecturer, his degree was actually in engineering. He obtained first class engineering degree. He obtained 2 master's degree in finance, one of them from Macquarie University, and he got his PhD in finance degree from Melbourne University. So it's a very, very good university. But he told me a lot of time that he read Journal of Finance article, he couldn't even understand the formula because it is too complicated. So you can see now how finance is moving towards this advanced modeling technique using high mathematical equation, for instance. So it is compulsory for students and researchers as well, me included, to have good knowledge of some mathematical concepts such as linear and nonlinear equations, matrices, calculus, linear and nonlinear programming, and so on. This is very, very important. Now, we are also moving towards big data and AI. So we can see lots of papers are actually being published in top tier Q1 journals, exploring, for instance, stock return forecasting or advanced mathematical portfolios by using some heuristic methods such as neural networks, genetic and evolutionary algorithm, particle swarm optimizations, and so on. So we are moving towards this as well. Now, last but obviously not the least, and I would say this one is equally, if not more important than the rest, is actually academic writing. At the end of the day, if we want to produce a research in finance or investment, the end result is writing, right? So you have to write papers, journal articles, or conference papers. One has to have good grasp of English, and I can see that sadly some of the papers, especially those published in predatory journals, even in the title you can see some grammatical errors like plural, singular, and so on. They're just the basic ones. I have, in my experience as a reviewer, also rejected some papers simply on the basis of the academic writing. The main reason being, if the authors cannot do English correctly, just simple, plural, singular, past tense, present tense, then how can I, as a reviewer, be confident that the analysis is correct as well? So it is a valid question, isn't it? And if the English is very, very bad, then obviously I don't think it can reflect the good quality of that particular journal, and the citation might be low as well. Okay, so I hope that is clear. Now, a very quick exercise. Since we have already gone through some potential topics and theories in finance, we're going to do this quick exercise. If the audience, I mean, all of you can also switch on your microphone as well. Now, in this particular case, let's say one potential student wants to do research in this area, customer satisfaction during COVID-19 pandemic, evidence from Islamic banking and investment firms. Can anyone let me know what you think about this topic? Is this a financial research? And if it is, under which financial topic would this cover? I open the floor to any audience to answer this one. But you can see my screen, right? We have the quick exercise icon there. Yes?
Yes.
Okay, that's good. I'm afraid that you are still in the first slide.
Yes,
Okay,
please.
if there's anyone who can share. Anyone care to share your view? Evidence from Islamic banking and investment firms. Maybe the moderator can start. The rest are perhaps a bit shy, or maybe
Okay.
still morning, still on the bed, maybe work from home.
Oh, no. It's almost 10 a.m. Again, in my opinion, customer satisfaction is a marketing field. Banking and investment firm is finance, so it could be collaboration between finance and marketing.
Okay, thank you for your answer. I will not tell you whether this is a research in finance or not yet. Maybe we can have one or two more opinions.
Yeah.
Is there anyone else wish to share?
Okay, maybe it's from me. From my opinion, I think I'm in line with Mrs. Wahyuni, sir. The main topic is customer satisfaction, which means that it's marketing management, but the case study is focusing on the Islamic banking and investment firms. So the object is financial topics, but the main research on the customer satisfaction, it's not finance research.
Okay, okay. Thank you, both of you. Very good responses.
Yeah.
So now if I change the question a bit, okay, let's say if I ask you, do you think someone who do this topic can be considered a finance or investment expert? Like, for example, if you find that a person, let's say Dr. We just make this name, Dr. Ronaldo, for example, yeah, do a research on in this area. Do you think he is considered as an expert in investment? And then if you want to buy or sell shares, you have to consult him. Do you think that is the case or not? Referring to the topic itself.
I think it's no.
No.
Yes, okay, that's a good answer. Okay, why? Can you see the, again, I have to ask because I don't know if you can see there are 3 other tables now. Can you see that?
Yes.
Okay, that's good. This is not a finance research. And the main concern, especially that, because I understand that there are several students joining us as well. I received, I think about 3 applications or 4 applications, 1 from Pakistan, 2 from Middle East, another one is from Malaysia, I think, who would like to ask me to be the supervisor. And that student actually wishes, those students wishes to explore this type of topic. So obviously this is not a finance topic. Okay. In similar vein, if you can see the next example there, on the service and customer recovery satisfaction for AirAsia and Malaysia Airlines, this is not aviation or mechanical engineering research or aeronautical research, isn't it? Because it has nothing to do with that. This is again satisfaction. And it doesn't mean that people graduated from this kind of topic means that he is an expert in piloting airplanes. Similarly, if you look at the last one, investigating the drivers of patient satisfaction in public and private hospitals in Jakarta, this is not a medical research, isn't it? Because medical research means differently. Now, Nature, for instance, state that medical research actually involves research in fields such as biology, chemistry, toxicology, and so on. So it doesn't mean that someone doing this kind of research will be able to operate and do brain surgery, isn't it? It has nothing to do with that. It is just that it is exploring the public and private hospitals or healthcare industry. Similarly, in the first example, it's just a case study like what one of your friends shared just now. It is about a banking and finance industry, but this is not a finance research. The research is customer satisfaction, which I assume should be marketing, isn't it? So normally you have models such as SurfQual and so on. I'm not familiar. I've heard of this model, but I'm not familiar with them. So why is it important? The first one is, of course, going back to the understanding the topic, you need to appoint the correct supervisors. All right. And of course, the examiners should come from that particular field as well. The next one is, of course, in terms of publication. If you do this kind of research, you cannot expect to submit it in a pure finance journal, all right? Such as Journal of Portfolio Management, Journal of Financial Economics. It is unlikely that this kind of paper can be accepted. So you need to understand the topic and the position of that topic within the broader field. And finally, obviously, this will reflect the true area of expertise. Again, if you do this part, the last one, investigating drivers of patient satisfaction, it doesn't mean that you can now do brain surgery. It has nothing to do with medical, even though the sample is hospital. Similarly, if you do this first topic, it doesn't mean you are an expert in investment and do investment analysis, because this one is actually on customer satisfaction. The banking and investment firms are only the sample. So this is very, very important. And sadly, I find that lots of students make this mistake when applying and when presenting their research. I hope that is clear. But if you have any question, you are feel free to let me know. Yeah. Now we go into the primer or the basic of some of the methods that I will be discussing. Now, I mentioned earlier as well that I will be focusing on, especially on the equity market, because this one is key and perhaps the most, I would say, arguably the most popular financial instruments. But there are other markets as well or other instruments in finance that you have to be aware of. For instance, bond market, the financial derivative markets, the foreign exchange market, and so on. For example, in financial derivative, you have futures, forward, swap, and options. Okay, so those things also have different investment strategies as well. So very quickly, I mentioned earlier on the theory of efficient market. So there are basically three forms of efficient market. The first one is weak form, where it indicates all historical prices and returns are already reflected in the stock price. The next one is semi-strong, which means all public information. What it means is that financial statement information, corporate governance data, as well as historical prices and returns, because semi-strong form also incorporate weak form. Those information are already reflected in the stock prices. And finally, you have the strong form, which means that all information, not only public, but also private information, such as insider information, which should have been known only to those people inside the company, is also reflected in the stock prices. So what are the investment methods or investment strategies that you can use in the financial markets? Now, the first one is, of course, the most popular one as well, what we call the fundamental analysis or value investing. So this one is basically just a stock selection strategy. I'm sure you know some of the stocks listed on the stock market, such as, let's say, I'm not sure about the stocks in Indonesia market, but make it US market, such as Microsoft, Apple, those kind of companies, Intel, and so on. So how do you select those stocks? You can have company analysis, you can look into industry, macroeconomic, future profit outlook, and so on. Now, obviously, there are two types of, or two ways for you to go into this data. The first one is, of course, top-down. You look at the broader scale first, macroeconomic, industry, and then the company, or bottom-up approach, which is the other way around. So how do you screen for this information? I mentioned earlier about financial database. So if you have Bloomberg access, or if you have data stream, you can have lots of financial data or financial statement information from there. But it is not only restricted to quantitative information, such as those profitability, profit ratios, earnings, EPS, PE ratio, and so on. But now, people are also considering qualitative information, which I will cover shortly. The next strategy is technical analysis. You can look into price charts, some technical indicators, as well as oscillators. Oscillators can also be considered as indicators, by the way. So technical analysis, you just actually look into past market behavior to determine the current state or condition of the markets to do the forecasting. So you look at the charts, you look at some formulas or to find some historical patterns in order for you to invest in the particular financial instrument. Now, these two strategies are actually in opposed to the efficient market theory. The reason being, if you can make abnormal returns from trading using technical analysis after considering the associated costs and specific risk, then it is said that the market is not weak form efficient. What it means is that it is inefficient at the weak form. Similarly, if you can use fundamental analysis, it means the market is not semi-strong efficient. So these are directly related to the efficient market hypothesis, this strategy. So going back to publication strategy, one has to make sure that when you do this type of analysis, if you do these research methods, you must also refer to the relevant theory. Recently, I gave a, I believe, major correction from one of the journal. I think it was Afro-Asian Journal of Finance and Accounting, I think, in the science, because those authors do the analysis and infer some of the findings in terms of profitabilities and so on without referring to the theory at all, which is then considered very weak. Because as an academic researcher, you must also reflect on the theoretical background. So what are the methods normally used for fundamentals? So we have the zero growth model, the constant growth, as well as variable growth model. So obviously this, by the way, can you see my slide here? I have to constantly or consistently check with the moderator.
Yes.
Yes.
Yes, the fundamentals, right? The heading there, part one,
Yes.
fundamentals.
The
Okay, that's good.
equations.
All right. Okay, thank you. So normally you're gonna have the variable growth model, but most often in academic research, you can see that you actually use other approaches or model, not free cash flow, but normally they look into the ratios, the financial ratios, PE ratios, the price to book value ratios, return on equity, return on asset, dividend payout ratio, and so on. These are the common ratios. There are many other ratios. And as I said earlier, if you have access to data stream, for instance, you're going to find hundreds of financial ratios here. So there's a lot of potential to do research there. Now, earlier I mentioned about qualitative factors as well. So one, I should not only look into the quantitative parts, but nowadays, socially responsible investments is also a thing. Yeah, it's also an exciting area of research, and you can see lots of papers are being published in good journals as well. So basically, you refer to these three things: environmental, social, and governance. Okay, so environmental, you're gonna have like the carbon and the toxic waste managements and so on. Social, maybe some of the donation of the company. Just a few examples. Governance, you can look into the board membership, female male ratios, CEO duality, those kind of things. So these are actually being studied as well, where people have seen that there are some relationship between ESG level and stock return performance. So these, again, are among the fundamentals being used in the fundamental analysis study. So how come decisions of those particular stock or particular company can affect stock value? So obviously there will be some decision by financial manager, and we are referring to those which can have effect on the finances of the company. So there will be some expected return measure, and we can use the expected dividend computation from there and find the dividend growth. And then we can also consider the risk measurement in order to compute the required rate of return. And at the end of the day, we can have the effect on the stock value by using some valuation models. So once you have these things, or even if you refer to the normal multiples or ratios, normally we have two ways or two types of fundamental analysis study. The first one is, of course, you can do it as a forecasting. The next one is you can filter. Say, for example, you have those stocks with higher PE as compared to lower PE. You can also look into the value versus growth. So basically what it does is just based on this fundamental data, you just screen or filter and sort those companies according to those criteria by forming some portfolios. And then from there, you can look at the differences of the performance between those two portfolios. The next one, we look into technicals or technical analysis. Now, technical analysis, I'm sure most of you have seen this, right? Maybe in the news or in some websites. It's just a study of historical market pattern based on prices and volume. So there are actually two ways of doing technical analysis. It can be classified broadly into subjective analysis, which is based on charting. And the next one is objective analysis, where you use some mathematical formulation to do the analysis and validation. So technicians or technical analysts believe that any price influencing factors such as fundamental factors that we referred to earlier, psychological and other stuff, are already reflected in the prices. So because all those factors such as financial statement informations and ratios are already reflected in the stock prices, you shouldn't study fundamental. That is at least the argument from technicians. Yeah, it doesn't mean it is right, but that is the argument. So what it means is that technicians believe you should only study the market itself. You don't have to study the fundamentals. Okay. So whether it is right or wrong, obviously I also disagree with this view, because in my personal view as an academician, as well as my view as a practitioner, we have to look into both technical and fundamental. So normally fundamental helps you to screen the good companies, to make it easy. All right, we can define it as a good company. And then technical indicators can help you to time the market entry or exit. So you know when to buy and sell. Okay, just some brief history. Technical analysis is very old actually. So it started from the ancient Babylonian, where they have these commodity prices for forecasting. In the 18th century, we have the Munehisa Homa. I'm sure some of you are familiar with candlestick charts. And then Charles Dow developed the average, which is now known as the Dow Jones Industrial Average, DJIA, the 30 largest stocks in the US market. In the 20th century, because we have advancements in computer and programming and so on, there have been developments of many indicators such as simple moving average, exponential moving average convergence, divergence, relative strength index, average true range, Bollinger Bands, and other indicators. So of course now AI and big data are becoming more important and more prevalent in our research field. So these are some of the areas that you can explore as well. Some of the formulas are given there. I don't want to go into too much detail. There are literally hundreds of technical indicators. These are just the four of perhaps the most popular in this particular field. So these are some of the charts if you use that kind of formula in order to analyze the data. And there are, again, like I mentioned earlier, some other indicators as well. Ken-Slim, Chaikin oscillator, Fibonacci, Fourier transform, as well as stochastic oscillators. You have the stochastic K as well as the D percentage. Yeah? Oscillators is because the figures or the indicators actually oscillate between 0 and 100. Okay, it is squashed between those two thresholds. Okay, so the next one, which is also important and very important, is the portfolio diversification. So obviously, I'm sure most of you are familiar with the old saying of "do not put all the eggs in one basket." Have you heard of that saying? Don't put all the eggs in one basket. Why? Because if the basket fall or dropped, then it is highly likely that all the eggs are broken as well and damaged, isn't it? So what this particular concept is in finance sense is that you have to diversify or allocate your fund into several different asset classes or securities. So for example, if you put some of your money in the money market, some in the stock market, so if the stock market goes wrong or goes bust or bankrupt, if it turns out bad, at least you still have money in the money market, isn't it? Or the bond markets and so on. Similarly, at the same asset class, let's say in the same security level, if you invest in equities, you shouldn't invest all your money in just one company. Let's say in Microsoft only, you cannot do that. You have to diversify and invest in other companies as well. Maybe Ford, okay, maybe McDonald, Coca-Cola. Now, Coca-Cola is quite fun, isn't it? What happens with Cristiano Ronaldo recently and the loss in value of that particular stock. But that is just one of the example why you shouldn't invest all your money in just one stock, such as Coca-Cola. You should invest in other industries as well. So this is a very basic formula of mean variance optimization, and some other models as well that you have is the more advanced Black Litterman model. You can also maximize shark. You can consider complex constraints such as where the stocks should be traded only in round units, and there are certain cardinality constraints, for instance, or stocks, a certain number of stocks are needed in the portfolio and so on. And those complex constraints would transform the portfolio, the simple quadratic programming of your portfolio here, into a non-polynomial time complete problem. So this one you cannot solve using a simple quadratic or linear programming method anymore. For the NP complete problem here, you must use other methods such as heuristics. You can use, for instance, genetic algorithm or evolutionary algorithm and particle swarm optimization in order to solve this kind of problem. You cannot solve it using the simple programming, simple linear programming problem anymore. You also have the conditional value at risk, global mean variance, and so on. So there are other things that you have to consider. And of course, you can consider the correlations. And the basic idea, again, is if you invest only in one stock, so if you lose money, everything is lost, isn't it? But once you invest or you diversify across different securities or assets in the portfolio, you can actually reduce the diversifiable risk or the firm specific risk. All right. But what happens is that you cannot actually eliminate the non-diversifiable, which is the systematic risk, because the systematic risk is inherent in your portfolio, especially at a local portfolio. Okay. Some of the important considerations when you want to do research in this area. So the first one is data snooping. So what data snooping here means is that you try to find some patterns. You by looking into this data when the pattern might not actually be there. So how can you rectify in terms of robustness? What you should do is actually, for instance, you can test the data in an out of sample scenario. You optimize, for example, your portfolio in sample, and then you have to test whether the portfolio is still optimal in the out of sample window. So this is also considered as a validation. All right. The next common issue is actually survivorship bias. So survivorship, you can see the skull there. What it means is that some of the companies that you analyze for your research papers or your master's and PhD thesis might no longer exist. Okay, the company can go delisted, isn't it? It can also actually being taken over, or some mergers and acquisition with other companies and so on. So if you don't consider the financial performance of that company anymore, because it is no longer in your sample, then your study would have suffered from survivorship bias, because you only study the company which are surviving companies, the companies which are still existing, where in fact, where you want to study the true performance, okay, you have to also look into the performance of that company which are no longer exists. The next one is look ahead bias. Now, this is another important issue in forecasting. For example, if you use financial statement information, annual reports, normally they are, let's say the accounting or financial year end for a particular company is 31st of December every year. Yeah. So if you do that particular analysis using that data at the end of the calendar year, it is not actually correct, because normally financial statement information or announcement dates of these financial statements ranges between maybe 3 months to 6 months. So if you do the data analysis using the data at 31st of December, and then you assume that on the next date, which is 1st of January, you can already use the data for forecasting, then your studies suffer from look ahead bias. Because on 1st of January, the data is not even available yet, even though the financial year end is actually 31st of December. I hope you can understand this part, yeah? So in order for you to really do a correct analysis, you have to consider the announcement date. So let's say it is 31st of December when the data is available. Let me do this pen. All right. This one is, let's say, the financial year end. And then the data actually appears here. All right. So this should be the point where you can make the analysis in order for you to decide, let's say, based on the PE ratio, yeah, for example, this is PE ratio, that you can forecast the stock return. You cannot use this one. This is wrong, because at this date, let's say this one is 31st of, sorry, bad handwriting because I'm using mouse now. I didn't expect to write here. Otherwise, I would have used my pen, but it's okay. So let's say this one is 1st of March. Can you see this, by the way?
Yes.
Yes. Okay, that's good. So you cannot assume that you can start the analysis here. Why? Because the data is not there yet. So you cannot use this date yet, or the 1st or February or end of February, because the data is not really available yet. When you want to see whether PE can really forecast stock returns or not, you have to make sure that this data is already available. Otherwise, it is pointless for you to do so. All right. So these are some of the things that you have to consider. Now, the next one is, of course, you have the constraints. Okay, some of the constraints I mentioned earlier, like the round lot constraints. Whenever you want to see whether your analysis or your investment strategy can make money or not, you have to also consider costs, isn't it? Whenever you want to buy or sell shares, you have to pay trading costs or stamp duties and clearing fees, for instance. So this must be considered as well. Otherwise, your findings or your profit is actually inflated. So because of that, these are some of the constraints that you must take into account. If you want to do studies on portfolio optimization, you have to consider other constraints such as the minimum and maximum allocation in each of the stocks, or what we call in optimal portfolio is floor and ceiling constraint. Because you don't want to invest, let's say 90% in only one stock and 10% in the rest of the portfolio. You also have to consider the industry constraints. You must make sure that the investment is properly diversified according to different industries. For example, you want to invest in the banking, in the construction company, technology, and so on. Otherwise, if you invest only in one industry, and if that industry fall, then it will affect your whole portfolio. So these are just some of the examples and why these constraints are actually important for consideration. Obviously, in terms of portfolio, another important consideration for floor and ceiling constraints is because you want to mitigate the estimation risk. All right. And as I mentioned earlier, whenever you want to do this performance, oh, by the way, moderator, can you see my slide here?
Yes.
People swimming in shark. Okay, that's good. So when you do the analysis, when you want to see whether certain investment strategy can make money or not, you have to also consider some performance measures. All right. So if you only explore the returns, such as raw return, log return, and so on, it is quite weak. You have to consider other performance measurements, such as alpha and beta. I'm sure most of you are familiar with this. You have to consider the Sharpe ratio, where you take into account both risk and return, risk as presented by the standard deviation. You can also consider Sortino and omega ratio, value at risk, and that you can use. Why? Because the first thing is, whenever you invest, you don't want to look only in terms of statistical significance, but also economic significance. And why you have to consider risk as well in formulating some of these ratios is because, again, in finance, there is a very basic concept of high risk, high return. It's the same as you as well, I believe. If I ask you, for example, the moderator, let's say if you work as a lecturer here in the right, yeah, right hand side, let's say you will be given a salary of 5K per month. How much would you require if your job is to swim with shark? How much per month? Yes, moderator?
Maybe
Asa?
$1 million.
1 million. Okay, okay, that's a good. Okay, 1 million. See, why? Why do you require 1 million from this?
Even 1 million is not enough.
Even not enough. Okay, that's interesting. All right.
Yeah.
But why? Why do you require 1 million? Because?
Because it's very risky.
Yes. So in investment as well, you cannot say, like, for example, if the moderator is investing in some stock, I am also investing in some stock or portfolio. And I told her, okay, you see, my return is much higher. I obtain 100,000 and the moderator only gain, let's say, $50,000. We cannot compare simply on the basis of returns. We must also look in terms of the risk. Maybe I get 100,000 because my investment risk is actually higher. It's the same as this particular example. So in investment performance, in terms of the analysis, how do you evaluate this risk and return? Then you have this kind of formula. All right. So this will give you a correct way, or what we normally call in finance or economic research, a robust way, robustness of the study. You need to explore this one. Obviously, in terms of statistical and traditional tests, you're going to have things such as ANOVA and t-test, Jobson and Koki, Mammal and Diable Mariano test here as well in terms of prediction. And this one is actually just for the sake of testing Sharpe ratio. So you can just imagine, this one is developed for the sake of testing the Sharpe ratio. And then you have the White's RC reality check, as well as Hansen's superior predictive ability test, in order to see whether or not your trading strategies are really significant in making money. So why economic significance and statistical significance is different? The reason is simple. Let's say the moderator make 500 ringgit of profit, I make 510 ringgit. In some way, if we do the statistical test, t-test, and so on, we might find that the result is statistically significant. But the difference, 500 that she make and 510 that I make, the difference is only 10, isn't it? Isn't it? Or minus 10 if you deduct it from the top. All right. Is 10 economically significant or not? The difference is only 10 ringgit. It may be statistically significant, but economically 10 ringgit, it is not significant. So because of that, you also have to look into the economic significance whenever you do investment research. Good research will do this, especially those which are published in top tier journal. So weak research, normally they don't explore this one. All right, so I just explained earlier about the methods or investment methods in the investing in equity markets. Of course, I didn't touch on the bond and financial options, for instance, or financial derivative. In options, you have other strategy actually, such as covered call, merit put, the bull call spread, long straddle, the strangle, the butterfly spread, and so on, which have not been covered in my presentation. All right, that is for option based strategy. And what about bonds? Bonds, of course, you have some passive bond, you have bond laddering, indexing, bond immunization strategies, and so on. So you can see that investment methods or investment research is very, very broad, and there's a lot of opportunity then you can explore. But like I said earlier as well, research on equity market is arguably the most exciting and the most popular as well. So the things that I explained earlier, which is fundamental, technical, and portfolio diversification are really key in this area. So you can refer to some of the key and useful papers that I give you here. Pharma, obviously the Nobel Prize winner, the EMH, she also explored the fundamental analysis of value investment. You can refer to Markowitz and Black-Litterman. If you are doing research in this area, you have to explore this. So this Piotrowski and so in terms of value investment, you can also refer to Sloan, Piotrowski, Pharma and French recently published as well in 2021. For technical analysis, you can refer some of these key papers as well. Okay, 92 by Brock et al. And Medgalchi paper, as well as this one, quite popular as well in terms of the RSI and so on. So some of my own related publications in case some of the audience are interested to read or to expand upon. Okay, so these are just some of the other example, because I did research on fundamental, on technical, as well as portfolio optimization. I also explore some artificial intelligence such as neural networks. I also did some research about particle swarm optimization in the financial markets as well. So thank you for being with me. So I guess that's all my presentation for now. I hope it is beneficial, especially for those students and researchers who wish to explore research in the financial market, specifically on the investment strategies and portfolio diversification. So thanks again for inviting me. I would like to thank the university, both universities, Professor Dean, Professor Dr. Shaladin Moda, my head of department, Associate Professor Dr. Azwadi Ali, who recommended me to give me this talk, Dr. Farah, of course, and the rest of the steering committee, as well as the moderator who facilitate this session. Thank you, and Assalamualaikum.
Okay, thank you very much for Dr. Sahwan. It's a great presentation, and let me summarize a little bit. It's a great presentation about research in investment, a primer and method. and in my opinion, I will give the 3 main points. Okay, the research in finance or investment is related from the theory and the topics. And Dr. Sahwan also gives some key important concept and some example, and then it's a easy, quick exercise about the customer satisfaction. Is a research in finance or not? Okay, and then the second is a primer on investment method. It's about the fundamental analysis, technical analysis, and portfolio diversification. We can see that in portfolio diversification is a very important because you can see in the statement that don't put your egg in the one basket. And we can see that the systematic risk and non-systematic risk. And the last but not least is some performance measure by investment risk and return in traditional or statistical tests. And maybe we have to more exploring Dr. Sahwan about artificial intelligence and big data analytics. It's okay. And thank you for the reference, because the some key study is related for the publication. Doesn't matter from the student, for the lecturer, or the researchers. Okay, thank you. And the next session is for the second speaker. Allow Ms. Salsa to have the session.
Thank you, Ibu Wahyuni. Okay, so now we will move on to the next speaker of the day. Please allow me to introduce Dr. Hendro Sasongko, AKMMCA, and I will read the short biography of him. Okay, so Dr. Hendro was born in Jakarta, 4th of October 1980. He is now the Dean of Faculty of Economics and Business, Universitas Pakuan, and it is since 2014, yes. And then from 2020, Dr. Hendro is also a restructuring team of Perusahaan Daerah Jasa Transportasi Bogor. He is also Board of Commissioner PT Mitra Bisnis Madani since 2018. He is an expert in finance and accounting, where his educational background is, the first is he graduated his doctoral as well as master degree in finance from School of Business, Institut Pertanian Bogor. And his bachelor degree is in accounting from Sekolah Tinggi Akuntansi Negara, or STAN. Okay, that's the short biography of Dr. Hendro. And now, without further ado, let's start the second session. Dr. Hendro Sasongko, the time is yours.
Thank you, Salsa. Bismillahirrahmanirrahim. My honorable colleagues, Professor Safwan, Mbak Salsa, ya, and then Mbak Wahyuni, ya, and also as a moderator, of course, my colleagues, Farah, Vera, ya, and distinguished lecturer and student. Ya. Assalamualaikum warahmatullahi wabarakatuh. Salam sejahtera bagi kita semua, ya. If Professor Safwan discuss research and theory in high level, let me discuss topics which are technical in nature, and maybe in any ways I will simplify concept and operation model. Okay, let me start. May I share the screen, Rosa?
Yes, sure.
Okay, let's start. Our discussion divide into two parts. The first, terminology and visibility method, and second is example of financial analysis model. When my colleague Farah asked me what topics will I bring, I replied with no doubt, financial analysis model. Why? As I said before, the student, especially in finance, of course, have to uh, refresh their knowledge in finance, in capital budgeting, especially, uh, and how to calculate net present value, for example, in the rate of return, as a parameters of feasibility, and how for the student with no background in finance, of course, I believe that there still needs the understanding of finance, Why? Because they can calculate feasibility of their business. Okay. Uh, what is financial analysis model? Financial analysis model is the process of creating a summary of companies' expenses and earnings in the form of a spreadsheet that can be used to calculate and analyzes the impact of the future event or decision. So the key word is spreadsheet. It means that we have to utilize a platform in Excel. Then a financial analysis model is a representation in numbers of a company operation in the past, present, and forecast future. Such model are intended to be used as decision-making tools. Company executive might use them to estimate the cost and project the profit of proposed new project. So let's see, past, present, and the forecast future. It means that financial analysis model or farm, have to process past and present data, and then forecast uh, based on the agreed assumption. Financial model fund is just a tool in order to help financial decision process. In a project, fund is used to value feasible project. Fund must be able to present the level of feasibility based on agreed parameters. So we have to discuss agreed parameter. What is the agreed parameters? Let me discuss about financial feasibility method. It consists two methods, non-time value method and time value method. What difference? If we have 1,000 no, it means not different with 1,000 in the future. So that's why we call no time value and no time value method. This method consists payback method, and then counting rate of return. So in the other side, time value method consists net present value or NPV, and then profitability index or PI, and internal rate of return. We have to concentrate to discounted cash flow method. Why? Because commonly this method used in financial model. What discounted cash flow method here is that the value of money today is different from the value of money in the future. For example, value of money, as I said before, if you have money 1,000 or sorry, 1 million rupiah today, different from value of money 1 million rupiah in the next year. That's why we call there is a value of money, time value of money. Some terminology in this concept cash flow. You can see that present value, the value of money at the present, and then future value, value for money in the future, and then discount factor, a number used as a medium to calculate present value and or future value, and then time horizon, yeah, period as a basis to calculate present value and future value based on discount factor. Okay, next. Discount factor can be calculated from first interest rate, second inflation rate, and then WACC, weighting average cost of capital, yeah, ATC, etc. Yeah. So it just for reminding audience, student, yeah. You can see there is a time horizon, timeline, yeah, with 1, 2, 3, 4, yeah, 12 period, yeah. At the starting point, we call present value, and the end point, or throughout the period, yeah, we call future value, yeah. So discount factor is a factor, yeah, that we can withdraw the future value to the present value or vice versa. Yeah. Discount factor can withdraw future value, yeah, to present value or vice versa. Yeah, present value to future value. This is formula for future value, yeah, equal to present value times, yeah, please see in the bracket, yeah, 1 plus r, yeah, to the power of n. Yeah. So vice versa, present value, future value times 1 divided in bracket, of course, yeah, 1 plus r to the power of n. Yeah, n means sum of period. Yeah, r is discount factor. Okay. Uh, Next, yeah, net present value or NPV. Yeah, difference between present value investment yield and present value investment expenditure. Yeah, what it mean? NPV, present value of investment yield, minus present value investment expenditure. Present value investment yield, present value of net cash inflow. Yeah, the, for example, dividend, yeah, or net yield received by investor. Yeah, remember investor. Yeah, and NPV, invest expenditure. Yeah, present value of cash outflow for investment. So, profitability index or PI is equal or same with NPV inform ratio. So there is no difference between NPV and profit index, yeah, but different in form ratio. Uh, what is the internal rate of return? Discount factor rate resulting in NPV equal to zero, Yeah, IRR rate, yeah, NPV, yeah, equal zero. PV investment yield minus PV investment expenditure equal zero. Yeah, so we can state that NPV answer the question whether the project can feasible at the agreed rate of return. In the other side, IRR answer the question what is the rate of return of project. So can you understand? Okay, next. So we back to timeline, yeah, but there are 10 period here, yeah. You can see that the first two period, yeah, their investment expenditure or cash outflow 3,000 and 1,000. You can see that the notable is minus 3,000 minus 1,000 is mean cash outflow. And the project start to produce, yeah, since
period 3, yeah, 200, yeah, and so on, yeah, until period 10. Yeah. Okay. So how we calculate the feasibility of the project? The first, yeah, we have to withdraw the present value, yeah, of value, yeah, present value with discount factor, yeah, for investment expenditure. So 3,000 and 1,000, yeah, withdraw two present value, withdraw two the starting point, yeah, with discount factor as a medium. In the other side, yeah, we have to withdraw the present value, yeah, with discount factor, yeah, for, yeah, the sum of cash inflow, yeah, throughout the period, yeah, since period 3 until period 10. So NPV equal to present value investment bill, investment yield, yeah, minus present value investment expenditure. In this case, yeah, you can see that whether NPV plus or minus or maybe equal zero. So the question is how to determine discount factor rate. Yeah, so the question is how to determine discount factor rate. Okay. Next, yeah. Okay. This determining discount factor rate. Yeah, you can see that this discount factor rate, yeah, can produce from interest rate, inflation rate, expected rate of return, maybe weighting average cost of capital, yeah, or opportunity cost. Yeah.
20.
But
Yang 20 itu berubah kan? Ada sih itunya di sana.
common use, yeah, the method common use in preparing for financial projection of business study.
Kota Bogor meren ya? Kota Bogor
Weighting
kan
average cost of
ada berapa persil yang belum? 4. Terus yang satunya lagi itu udah jadi.
Sorry. So the method commonly used in preparing in financial projection of is weighting average cost of capital. So the question is how to calculate WACC. Sorry, this maybe technical in nature, student, yeah. COC is weighting average, yeah, of COD plus COA. COD cost of debt, COA the cost of equity. How to calculate, how to compute COC, yeah, this formula, COD times, yeah, DD is debt, yeah, divide D plus E, yeah, D plus E, D is debt, E is equity. D and E, we call it capital structure, yeah, times in bracket, don't forget, yeah, 1 minus tax, yeah, tax mean corporate income tax, yeah, plus COE, cost of equity, times E, divide D plus E. Yeah. So we can see that D divide D plus E or E divide D plus E means composition of capital structure. Where COD cost of debt, yeah, you know, we can verify it, yeah, maybe relative simple to verify it, yeah. We can see, we can search, yeah, how the interest rate, yeah, from maybe investment loan, yeah, from certain bank, yeah, Mandiri, BRI, yeah, or NCBC in Malaysia, maybe, yeah. Cost of equity we can derive from CAPM or capital asset pricing model approach, yeah, by formula COE equal to RF. RF means risk-free rate, yeah, plus beta times in bracket, don't forget, yeah, market return minus risk-free rate. Where RF risk-free rates, yeah,
Indonesia maybe surat berharga Bank Indonesia, or now we call 7 days repo, yeah, for the short term period, but in the long term period, yeah, we can use SUN, ya, surat utang negara, ya, or maybe we call treasury bond, ya. So 7 days repo, ya, means treasury bills, ya, in United States, ya, but SUN, ya, surat utang negara, ya, treasury bond in the United States, ya. And then beta times, ya, RM minus RF, ya. We call it risk premium. Beta is measure of the volatility of security of portfolio compared to the market as whole. Sorry, this typo. I think it's available for any sector. You can search, yeah, by Bloomberg, maybe, yeah, something like that, yeah, in other site. This example, yeah, how to we calculate the WACC, yeah. For example, CapEx, capital expenditure or investment is 100 billion, yeah, financed by capital structure with following details. Yeah. Debt, for example, 60 billion, equity 40 billions, yeah, total 100 billion, yeah. Interest rate, yeah, 9.5% per annum. Risk rate, yeah, we use SUN, ya, surat utang negara Indonesia, sorry, my friend, ya, in Indonesia. Yeah, for example, 8.5% per annum. Yeah, SUN is a treasury bond. Market return, for example, given 12.5 per annum. Yeah, B or beta for industry, for example, 1.2. Yeah, available data. Yeah, corporate income tax, right now 22% by regulation. Yeah. Investment yield, yeah, see the following table. So note, yeah, Excel use in calculation, don't forget, yeah. Jadi debt proportion 60 billion, equity proportion 40 billion, total investment 100 billion, yeah. By Excel, we can compute, or we can calculate, or we can state that the cost of debt is 1.5%. Sorry, 1.5% is given data. RF, yeah, risk rate 8.5%, yeah. Market return 12.5%, beta 1.2, tax 22%. Cost of equity, yeah, by formula of capital asset pricing model, yeah, before, yeah, we can produce 13.3%. So, yeah, by formula WACC, yeah, we can produce WACC 9.77%. Okay, yeah. The next. 9.77% used as discount factor rate in present value calculation. Don't forget, yeah. Commonly, yeah, method used in financial model is WACC. There is a sample of financial projection, yeah, FinPro, yeah, where is NPV, NRR calculation for the project by Excel. Don't forget, yeah. Discount factor 9.77%, yeah. That's the description, yeah. The period is 1 to 10, yeah. The investment, sorry, there is a finance percent, but which exclusive from the data. This data. Investment, yeah, in the red, 70,000, 30,000, yeah, and investment yield, yeah, start from the period 3 up to 10, yeah, you can see that net cash flow, yeah, the scheme of net cash flow, automated net cash flow, yeah, 70%,
30, yeah, in the first two period, and then plus 1,000, 10,000, etc. up to period 10. So by Excel, we can calculate, or we can produce NPV 196,264. IRR 34.21%. So what is the conclusion? NPV more than zero, IRR more than discount factor. So the conclusion is the project is feasible in terms of financial. Why? Atau how the reason? Don't forget NPV minimal or minimum zero or higher than zero. IRR more than discount factor. That is the other example how the impact of discount factor to project feasibility. Please note that there is a mutual exclusive example. Remember this formula, audience. Present value equal to future value times 1 divide in bracket 1 plus r to the power of. From this figure, you can see that the higher the discount factor, the smaller the NPV is. NPV, for example, with discount factor of 50%, reduce 49, with discount factor 20%, produce 27, with discount factor only 12%, NPV grow up to 66. But at discount factor 30%, the NPV minus 2. So we can conclude that the higher the discount factor, the smaller the NPV. Okay. Attention, the reference of discount factor rate in previous example with the IRR. Remember, IRR is discount rate NPV with discount rate equal 0. So we can see that from this figure. With discount factor 15%, 20%, 12%, or discount factor 30%, you can see that the scheme or the amount of NPV, very various. Higher discount factor, lower NPV. But in discount factor 29%, sorry, in discount factor 29%, NPV equal 0. So that's why 29% is minimal atau minimum IR. Because when please see discount factor 15%, 20%, 12%, NPV 49, 27, or even 66. But at discount factor 30%, NPV minus. So with discount factor 29%, NPV equal 0. So we call discount factor 29% is IRR. Okay. Let we see the second part of this session, architecture of financial analysis model.
You can see the figure, yeah, and the top side. There's a box of data and the box assumption. Yeah. Data consists general, technical, and financial aspect. Yeah. For example, yeah, data for general data, yeah, consists of demography, market, maybe macroeconomy. Yeah. Okay. Yeah. Technical, yeah, tentu according to the industry. Yeah. And financial, for example, financial report, yeah, capital expenditure or investment report, yeah, operating expense or OPEX report, yeah, that's data. Yeah. Assumption, yeah, please look the box. The economy, assumption economy. Economy means microeconomy or macroeconomy. Example, inflation, growth, exchange rate, yeah. And technical, yeah, according to the industry. Yeah. For example, in water industry, yeah, the sample of technical assumption, yeah, non-revenue water, common capacity, maybe production level, etc. Yeah. And finance assumption, yeah, capital structure, of course, yeah. Don't forget, capital structure consists uh, equity and debt. Capital structure proportion equity and debt. Yeah. Other example for financial assumption is one factor. Discount factor derived from, yeah, you know, yeah, weighted average cost of capital. And in the middle side of the box, yeah, project parameter, technical standard, for example, technical target, yeah, of course, yeah, according to the industry, yeah, we can talk about capacity, productivity, efficiency, others, yeah. And then financial feasibility, yeah, as we discussed before, yeah, accounting rate of return, payback period, return on investment. But remember, yeah, there are non-value, yeah, non-value uh, method. But we concentrate to discounted cash flow method, yeah, NDV, RR, profitability index. The lower side, yeah, projection, yeah, consists OPEX projection, CAPEX projection, and financing projection. Financing, remember, why? Yeah, there is a financing projection. Yeah, don't forget. Yeah. There is a capital structure. Yeah, in the assumption box. Capital structure means proportion debt and equity. So if we talk about debt, so we talk about financing scheme, cost of financing. And the bottom side, yeah, they are an output of the financial analysis model. Financial position projection, yeah, we call balance sheet or Indonesia, neraca. Yeah. And then profit and loss projection. Last but not least, cash flow projection. So the cash flow projection, profit and loss projection, yeah, will produce project return and equity return. So, yeah, the profile, yeah, will be used in decision making process. What data? Yeah, don't forget, yeah, uh, from the previous figure, yeah, we see at the top side of the box, yeah, data. Data as general concept refers to the fact that something as information or knowledge is special in some form suitable for better usage or processing. Example, economy, financial report, present report, market report. Yeah. What assumption? Yeah. A thing that is accepted as true or as certain to happen without proof. Example, macroeconomy. Yeah. Macroeconomic assumption. For example, interest rate, uh, growth. Yeah, in a maybe economic growth, exchange rate. Yeah, they are a sample of macroeconomy assumption. Yeah. Capacity and efficiency level, maybe growth or initiation, capital structure, yeah, they are some of sample of assumption. Okay, I hope you can see in the picture. Yeah, there is a summary of OPEX, yeah, audience. Yeah, uh, summary of OPEX, operating expenditure. Yeah. We can scrutinize the OPEX. Yeah, for example, in variable costs and fixed costs. Yeah, there is a sample for the water industry. Sorry. Yeah, we can see that variable costs, for example, raw water, chemical, utilities, yeah, and other profile, yeah, for example, volume sold, NRW, yeah, non-revenue water, volume produced, yeah, they are a sample, sample of OPEX in water industry. There is a summary of investment and depreciation, yeah, but sorry, there's a mutual exclusive figure here. For example, is summary investment and depreciation for in industry in hotel industry. We can see that investment, land building, furniture fixture, others, yeah, and how to calculate the depreciation and amortization, yeah, from movable or immovable tangible asset, maybe movable tangible asset, or maybe intangible asset. Yeah, so we call amortization, not depreciation. Yeah, that is a sample. Uh, the other sample, yeah, as an output of financial analysis model is finance projection and feasibility analysis. You can see that we can produce or as an output, yeah, IRR, yeah, and IRR, sorry, IRR, internal rate of return, as which is consists project IRR and equity IRR. Yeah. So we can see that, for example, yeah, we can see that the benchmark project IRR is according to cost discount factor or WACC, sorry, WICC, yeah. Uh, we can call it before, yeah. But the project IRR in actual, yeah, is produced from the profile of financial projection. Okay. Okay, thank you. Thank you, Mbak Salsa. Yeah, that is the end of our
Okay.
presentation.
Yes. Thank you very much, Dr. Hendro, for the insightful presentation. Please allow me to have a quick summarize on the lecture. So Dr. Hendro has explained the financial analysis model, which consists of the terminology and feasibility methods, as well as its examples. And his insightful lecture gave us a great understanding on the financial feasibility methods that categorize into non-time value methods, such as payback method and accounting rate of return, and also time value methods, or also known as discounted cash flow methods, such as NPV, profitability index, and IRR, or internal rate of return. He also explained a short brief on the architecture of financial analysis model that needs data, yeah, and assumptions, as well as its input to create a financial projection. Yeah, the financial projection could be a financial position projection, or maybe profit and loss projection, or even cash flow projection, yeah, for decision making. And lastly, he gives some examples on how the methods were used to calculate a financial projection and feasibility analysis. Okay, thank you once again, Dr. Hendro, for the lecture. And now we will open for the discussion session. Please, for the participants, if you have questions, you can use the raise hand feature and directly ask your question to the speakers. Or maybe for the participants who have difficulties in asking directly, you can put your question in the chat room and I will read the question for you. Okay, and mungkin untuk para audiens mahasiswa yang juga ingin bertanya dalam bahasa Indonesia, dipersilahkan juga nanti apabila pertanyaannya ditujukan untuk Dr. Sofwan, mungkin akan kami bantu untuk translate juga. Silahkan. Oke, mungkin maybe I will open 3 questions first, and then 3 questions first, and then I will give it to the speakers, and I will open for the second session of the Q&A. Okay, there is one question, yeah, in the chat box. I will read it for you. The first is from Ahmad Irfan, yeah, from Management University of Pakuan. And the question is, what I want to ask is still relevant to buy shares based on the PBV, PER indicator and others. I mean, what is this? Further of world investors started adoption to sector digital for buy digital bank, which is, if you look at the financial statement indicator, it doesn't really make sense for value investing. What is your opinion? Okay, that's the first question. Sorry for Ahmad Irfan. Can you specifically mention to whom the question is?
I think if I may address that question, moderator, because it relates to the share valuation.
Okay, sure.
Yes, if I may. Okay, sure. Thanks.
Okay.
So what happens is, I think if I'm not wrong, the last question, I mean, the last statement was about value investing doesn't make sense or something like that, isn't it? It
Yes,
actually
yes.
depends. It actually depends. Like I said earlier as well, you have lots of different models. Now, even if you are using the same model, is it okay if I share my screen?
Yes, sure.
Can I share my screen? Okay, sure. I'm just going to share my screen as well. If we look at the formula part, okay, I just share this part first. Right. Now, you can see the mathematical formula here, right?
Yes.
Okay. So firstly, you can see from here alone, you have several different models based on what your assumption on the growth will be, whether there is no growth at all, whether the growth will grow, I mean, constantly at a constant rate, or there is a variable growth. So in order for you to do this model, the first one is, of course, you have to consider the possible dividends, isn't it? If let's say you are using this kind of model. So you have to consider the dividends. You have to make some assumptions on the dividends. And then you have to have some assumption on the growth rates, isn't it? You may be using some calculation, but at the end of the day, let's say we have 200 audience here. If I ask each of the audience to put a specific figure on the growth rate, then surely the rate might be different as well. Let me just use this pen. Okay, this growth, for example. Another one is, of course, you have the required rate of return. Now, again, this part as well, you can find it using different methods. Maybe you want to use some CAPM methods, for example, and the calculation for beta itself can differ from one person to another, as well as how many data that you want to use to calculate beta. Are you using weekly data? Are you using daily data? So because of that, in practice, if you are working in the finance industry, for example, if in my case as well, during my own experience, whenever I receive investment report or investment advice by different investment houses, some of the reports say that this particular stock is overvalued. Some say this is undervalued. It doesn't have to be the same. And because they have different assumptions, they use different modeling technique. And this is just this. And then you have other approaches as well. You have PR, you have PB, and so on. You have different calculation, even PE itself, price earnings ratio. It is not only one variable, by the way. You have the historical one, you have trailing PE, and so on. So there are many different factors that you have to consider. So if you want to say that it doesn't work, then one of the ways is, of course, if you explore certain indicators, and then the findings should be robust because you use different criteria to evaluate your research as well. And then you may find that in some scenarios, even in the developed countries, the valuation technique might still work, especially in the emerging markets, because we assume that the market are still not efficient at the semi-strong form. So that is my response to that. I hope it answers your question. But at the end of the day, you have to do research in order to determine whether or not it is efficient or not, whether or not value investing or fundamental analysis is useful. Okay, I guess that's all. Thank you.
Thank you very much, Professor, for the answer. I think it's already answered the question, right, Ahmad Irfan?
Okay, can we move to Siti Nurmalasari? I don't see raise hand.
Siti Nurmalasari?
Yes. Or maybe she make wrong. Okay, any questions from the other participant? Okay, Dr. Safwan, I really enjoy with the presentation you gave, also Dr. Hendro Sasongko. May I can asking to Dr. Safwan first?
Yes, sure.
Yeah, I can. Currently, what is the hot topic in finance to do for the research? Or it's about, for example, if for the student, it's the conventional topic like a share price or dividend policy or capital structure. It's for the student, yes.
All right. Actually, one of the ways I'm not doing the session on Scopus or WAS yet, but
yeah,
maybe I can share here as well that possibly by end of this month, I'm going to be sharing a workshop, a short talk about using Scopus actually to enhance research and publications. So there I will actually share how you can find the hot topics and so on, like what you asked just now. But just briefly, for me to answer that particular question, if you read the current journals, obviously you're going to see that the hottest topic is on COVID-19.
Okay.
Okay, so if you can do research about, let's say, forecasting during this COVID-19, whether you can hedge your portfolios or diversification during these tough times, That is quite famous nowadays. So if you can see some of the journals as well, lots of journals actually, they are publishing special issues on COVID-19 and the economy, COVID-19 and the financial markets and so on. So the advantage of special issues normally is because publication is relatively quicker because they have a special issue that they want to feed it in a particular volume or issue. Then if you can prepare your according to this particular area, then you have a higher chance to publish quicker as well. So COVID-19, of course, forecasting, big data and AI is still there. And I think this one will continue to remain famous and relevant in the near future as well. Cryptocurrencies, okay, AI, lots of AIs is very good if you can explore that in your particular research. And in terms of other stuff like you mentioned as well about capital budgeting and so on, I would advise you to explore a more advanced method if you can consider the differences in the distribution. You have to, one of the requirements is also you must use a more advanced model rather than the deterministic model. So if say you want to use capital budgeting study, if you want to explore that particular study, make sure you also use such as Monte Carlo analysis, or at the very least simulation modeling, because I noticed that lots of students assume, or lots of researchers as well, use a deterministic model, and I think it is highly unlikely those studies can be published in a top tier journal. So if you want to publish in a top tier journal, make sure you use Monte Carlo analysis, Monte Carlo simulation at least. All right. So for the other stuff like fundamental, technical, and portfolio optimization, those are the things that I already explained earlier as well. So I think those are still hot topic, of course. If you search those things from Scopus database, you can still find many papers more recently published, including 2021. So I hope that helps. Thanks.
Okay, thank you. And I have another question. Sorry. How about the tools? Tools, I mean, in the methods. Does the tools is important than the topics? I mean, I found some paper, they have common topics, for example, like a share price or dividend policy or capital structure is nothing special, but they explore more in the tools analysis. For example, they show off about the robustness test and about the dynamic panel data using GMM or Arelon or something else.
That question is for me, I assume, is it? Ms. Wahyuni?
Yes.
Yes, okay. All right. It is important, yes. And again, if you go through Scopus database, if you look at finance research topics, you're going to find the tools is also in the topic itself, especially the advanced one. For example, if you are using, like I said, neural networks or swarm optimization, ant colony optimization, those kind of things, it is there in the topic. Now, you might ask, why is it important? It's not only in terms of, let's say I'm talking about the stock return or stock price forecasting, yeah? It is not only in terms of the return forecasting itself, but because by using the tools, you may be able to get higher return, which means that it has serious implications to practice. And because of that return, if you can adjust it properly according to the cost and risk, then it has serious implications to efficient market hypothesis as well. So what happens is that the tool itself is just, the thing that you use in order to analyze the data. But at the end of the day, the important stuff is by using the tool, does it have serious implications to theory and practice? Okay, in any good journal, theory is key. Whatever that you use, whether it's a tool, the sample, or whatever that you can think of, it must have implication or serious implication to theory. Only then does it have good potential to be published in a good journal. Okay.
Okay. Yeah. Thank you, Salsa.
Okay. Thank you, Ibu Wahyuni. And now we still open the Q&A session. I see that there are a lot of participants today, yeah, more than 200. And I might assume that you might have plenty of questions, yeah. Anyone here who want to ask to Dr. Hendro or maybe to Dr. Sa? You can ask directly, or maybe you can just write down in the chat. Not yet? Anyone, please? Okay, maybe while we are still waiting for another participants to ask, I have questions, and I think the questions still relate to Ibu Wahyuni. It's about the topic and also how to write financial research as well. But I want to ask in the other perspective. What I mean is, Prof. Safwan, you are one of the reviewer in Q1 Scopus Journal, right? So I'm curious. In your view, yeah, what is the difference between Q1 journal, Q2, and until Q4 in terms of the way we write? I mean, the outline of the paper, or maybe the systematic way how we can make it into Q1 journal instead of Q4, instead of the topic and also the tools that you have mentioned before. Any tips from you?
Okay, thank you,
Question
Ms.
for
Salsa.
Professor Safwan, of course, because he's an expert in Q.
Okay, thank you, Dr. Hendro. I'm still learning as well, actually. So part of our life as a human being, of course, and also as an academician, so we don't stop learning, isn't it? So that is part of life. So I'm still learning myself and try. Hopefully, I can improve my writings and so on. So referring to your question. Instead of just on the methods and so on, let's say you already have a very good methods, very robust and so on. So one of the things that will initially caught my eye is obviously the thing that you can read at first. And that is, of course, the English, isn't it? So the title should be very, very exciting, all right? And I have, like I said, I have rejected papers because of the English. And the way one can justify the contributions, one can highlight the significance of that particular research is so important. So sometimes, if I'm not mistaken, I still remember there was a paper about identical and non-identical twins, kembar seiras and non-seiras, yeah. Twins, sometimes they look the same, sometimes they look different, right? So there was a study, I believe was published in Journal of Finance, which is the very top tier of finance journal. Lots of Nobel Prize winner published there. And the paper was just looking into, if I'm not mistaken, the differences in their investment and risk profile among identical and non-identical twins. At first, you might think, it doesn't look that, the contribution might not seem that really high, isn't it? But the way the paper is structured, the way they justify it in terms of the behavioral aspects and so on, so those things are important. That is actually one of the things that differentiate between a good paper and a not paper that is not quite good. In terms of the format, I cannot give a definite answer because obviously different journal have different formats. In fact, some of the Q1 journals are the letter-based journal. By letters, I mean the short papers, less than 2,000 words and so on, but they are rated Q1 and have impact factors as well. So they have different formats. Some of them, they have introduction, even abstracts as well have different formats. I'm sure you have noticed like journals published by Emerald, they have structured format, isn't it? So some other journals like Elsevier, they are not structured. Okay, so these, in fact, in Finance Journal, I noticed one, I still don't remember the name of that, the title of that paper. It is something like the article title is, can we use certain model to predict stock return? And then you know what the abstract is? The abstract is just a single word, no, and then full stop. Can you just imagine that? It was published in a Q1 journal, a top tier journal, yeah. But the way it is not, if I do that, surely my paper will be rejected. I can confirm. Okay, but the way they are writing it, the way they're presenting it, yeah, that is very important. And of course, keep in mind as well that Q1 doesn't mean it's good. That one is, I hope this is clear. Most of the Q1 journals are good, but Q1 can also be some predatory journals can also get into Q1 and then get removed by Scopus Index, because Q or the journal quotas are just based simply on the number of citations and the number of papers, and then you just simply divide them and you get the answer. So if I ask you from the calculation of Q, where is the quality? By quality, you mean the theory, isn't it? The robustness. It's not there. If you really want to look into the quality, I would advise you to look into the ABDC, the Australian Business Deans Council. And that one is actually much tougher. They have the A star rank, the A rank, and so on. So for that, for example, for Finance Journal, I believe A star rank, there is only 7 journals. A star rank, such as Journal of Finance, Journal of Financial Economics, Review of Financial Studies, Journal of Corporate Finance, and so on. Only 7 journals. But if you look into Q1 journals for finance, there are lots of journals. Okay, so that one is tougher. If you can reach that level, is very good. Otherwise, Q is still okay, right? The general quotas from Scopus, and obviously, if you can get higher quotile, which is as ranked by ISI or WAS, Web of Science, that is much better as well because it has impact factors. And just so you know, I heard that from some of my colleagues in China, now they can only publish in impact factor journals. They are no longer allowed to publish even in just Scopus index journals. They must have impact factors. So it is very tough there in China. It's, the competition is tense there. Okay.
Okay, thank you very much, Dr. Safwan, for the explanation. Okay, I think there are some questions here. And the first one is for Dr. Hendro. It's from Dion Ahmad. Yeah, I will read the question for Dr. Hendro. Household consumption is expected to declarate until this pandemic, maybe decrease, yeah, expect to decrease until this pandemic is over. And we know Southeast Asia countries face the second wave of COVID-19. What financial planning that we have to prepare for the future? Because for now, everything seems full of uncertainty.
Okay, thank you, Salsa. The question is for me. Of course, yeah. The first, we have to make a plan, with a conservative principle, of course. Why? In the pandemic era, there's a full of uncertainty, as I said from Dion Ahmed. Yeah, so the first, of course, we have to make a plan with a conservative principle. Yeah, if you want to invest, in portfolio or something like that, of course, the portfolio should be in lower lower risk. For example, of course, you have to put the portfolio in the safe bank, for example, maybe, don't choose the bank with a high risk, maybe, For example, bank set on enterprise, For example, Mandiri Bank, Eden, etc. If the first, so you have to put the portfolio in the safe place. I think the first. The second, of course you have to keep expand, to the to keep your expand, carefully, of course, you have to efficient in your expenditure, and don't forget, you have still to for example, you have to still make investment in, for example, education. Don't forget. In the uncertainty era, you have to choose education. Maybe you have to educate in perguruan tinggi, university, or maybe informal training, for example. That's, I think this is my answer for Dion. Thank you, Sasa.
Okay, thank you, Dr. Hendro, for the answer. Dion, is it enough already? Dion Ahmad Armadi. Okay, thank you.
This question maybe for this question from Dion, Sasa, maybe with macroeconomy, maybe macroeconomy, but I just answer to a microeconomy aspect.
Great,
so,
great, Doctor.
Yeah.
Yes. Okay, Ibu Wahyuni.
Yeah. Okay. Good afternoon, Dr. Hendro.
Yeah.
Okay. May I asking you because it's about my experience again. When I study about capital budgeting technique, what are you explain about net present value, payback period, internal rate of return, maybe about 12 or 13 years ago, I expect that what kind of this term, and I mean, should I use this topic because I don't know, I would be like a lecturer, right? But in my career, before I decided to be a lecturer, I assigned as a financial analysis. Thank God, I study a lot. And then in financial analysis, I use the capital budgeting technique. So I just want to inform to all the participants, especially for the student, please don't just that I study finance, it is all right or not. It will be present in the practice or not. But in financial analysis, I use that because based on my experience, especially for the power plant project, when I expect review the feasibility study, I use it for the net present value and the internal rate of return. And my question is to Dr. Hendro, in the concept, net present value always is the best technique, all right?
Okay, thank you, Agni. Yeah. As we discussed before, yeah, there are some method, yeah, in feasibility study, yeah, non-value, yeah, and value, yeah, and value. And as you know, yeah, and commonly used in commonly used in practical. If, you have said in power plant investment, yeah, of course, yeah, we choose NPV or IRR, yeah. But remember, yeah, maybe you have experience in feasibility study in power plant or infrastructure project. Uh, the agreement or we call perjanjian kerjasama in bahasa Indonesia, ya, there is attachment, ya, and so I think you have see that there is a finance projection, and in finance projection, yeah, the output, yeah, the main output is IRR, and IRR, yeah, consists in the clause of agreement. So if there is an agreement or agreement between the first party and second party, or there is a government and investor. So what's the benefit or what pro or cons between IR and PV? I think that's the same definition, yeah. As we discussed before. Yeah, in PV, IRR is APV equal to zero. In PV, so IRR, of course, yeah, investor needs IRR more than discount factor. Yeah, higher IRR, of course, better for investor. But for government, of course, yeah, yeah, we have we have to we have to make the best effort, yeah, to raise IRR, yeah, close to discount factor. Yeah, I think that is my answer, Wahyuni, yeah, or maybe there is not clear yet for you.
Ibu Wahyuni?
Yeah. Yes. Thank you, Dr. Hendro. You explained very well, and it's a lot of information for today.
But remember, Wahyuni, yeah, the commonly used in attachment, yeah, attachment as a part of agreement, yeah, the investor, the investor or maybe the government as a related parties, yeah, commonly use IRR as a parameter of feasibility feasibility of the project.
Yes, it means in the concept, we always say that net present value is the best technique, but in practice, more used by IRR.
Yeah, yeah.
Yeah, thank you.
Okay, thank you, Dr. Hendro and Ibu Wahyuni. Maybe I will read one more question from the audience or the participants. There is one person who chat me in the chat box, and I will read the question. So the question is for Dr. Hendro. Yeah. The question is, how do we make this financial analysis model in the business practice? For example, when company want to establish a new business. That's the question, Dr. Hendro.
Okay, thank you, Sasa. Yeah, good question. Yeah, jadi how we make a financial analysis model for the new project or for new for new
New business.
business.
Yeah.
Yeah. as we discussed before, in a sector of financial model, you see that the top side of box, of farm is data. Yeah, data, for example, technical, maybe economy or financial, and of course, we put from historical data, but how we can make a financial projection or financial model for a new business. Of course, we have to assume, we have to make we have to make assumption. We have maybe put some data for others. But of course, it should be relevant to this business or this project. I think there is no problem. How to we how to how we make how to make a financial model. But as we discussed before, the financial model, built, through data assumption, and data or assumption is consists OPEX, operational expenditure, and then capital expenditure, investment, financing, how to finance, financing. I think there's a part, there's items that we have to make in financial analysis model. So I think no problem. Even farm for a new business or maybe existing business. I think, but then of course, if you have a business plan, business plan is consists several topics. For example, maybe we talk about SWOT analysis, about condition, present condition, and don't forget, commonly, in business plan, there is a part especially for financial projection, based on or bid from certain assumption, from historical data, there's a point. Thank you, Sasa.
Okay, thank you very much, Dr. Hendro. So the point is the assumption and the data, the most important inputs to make a financial projection. Okay.
Data,
great.
Assumption, and it consists investment, operating expenditure or OPEX, and then how the finance, how the fund and how to finance the project.
Okay, thank you very much, Dr. Hendro. Next, I will give it to Ibu Wahyuni.
Again, so here we are at the end of the session. Again, thank you very much for Dr. Safwan and Dr. Hendro. For me, it's a great presentation, it's a great seminar, and I hope we can meet in person next time. Or doesn't matter, we met in Jakarta, or maybe we can visit in Malaysia. Okay, we would like to pass to the next agenda to the Ibu Mita.
Oke, thank you Mbak Salsa, Mbak Wahyuni. Alhamdulillahirrabbilalamin ya. Thank you very much for Dr. Hendra and Associate Professor Dr. Safwan, who presented useful and completely theories. And sure, I want to say a big thank you and very appreciated to Mbak Salsa dan Mbak Wahyuni who moderate this session nicely. Luar biasa banget. After this event, I hope all the students more understand how make a right decision or how make a right funding decision as if a manager, and how to make appraisal about risk and return of investment. And all webinar materials will be shared on Google Drive after the webinar. Oh yeah, allow me to greeting a special guest today. Hello, Associate Professor Dr. Yuslina. Hello, Doctor. We are flattered by your attendance in this webinar. Yeah. And once again, I wanted to say thank you and big appreciation for all participants who have much enthusiasm and uh, many questions and to follow the event and ask the smarter question to the presenter. All participants attended and registered in webinar will receive an electronic certificate ya that share on the same Google Drive and we will share the link after this webinar. Jadi semuanya nanti dapat sertifikat ya, karena tadi ada beberapa juga rekan-rekan yang menanyakan di di kolom chat ya, dapat sertifikat atau enggak. So I remind you to fill the absence form in chat room or in chat box ya. Jadi biar nama kalian kita cantumin di situ. Silahkan dicek di chat box-nya masing-masing ya. And guest lecturer series will arrange as a routinity event involving many lecturers from Fakultas Ekonomi Universitas Pakuan and all partners and filled by many topics such as consumer behavior, international trade, human resource, operational management, and of course, accounting topic. So don't miss the next webinar with the awesome topic. And we invite you to join and improve your knowledge through the next webinar ya. Jadi jangan dilewatin teman-teman yang pengen nambah keahlian atau pengen nambah pengetahuannya di webinar minggu-minggu selanjutnya. Now we are going to the end of the event and once more I want to say thank you for all the committee who give much effort to develop this event together. Terima kasih untuk teman-teman dari SB, dari Trisakti, teman-teman dari UMT, dan terutama panitia dari FEB Unpak yang sangat luar biasa. Hopefully we will see in other event. Thank you all. Wassalamualaikum warahmatullahi wabarakatuh. Terima kasih. Selamat siang semuanya.
Assalamualaikum warahmatullahi wabarakatuh.
Many
Thank
thanks.
you, Wahyuni,
Waalaikumsalam
Salsa.
warahmatullahi
Thank you very
Dr.
much,
Hendro.
Thank you.
Dr. Hendro.
Thank you, Dr.
Wira
Safwan.
Gita,
Safwan.
Dr. Hendro, Miss Wahyuni, Miss Salsa, thanks.
Terima kasih Dr. Safwan, terima kasih Pak Hendro, Mbak Salsa, Mbak Wahyuni semuanya. Assalamualaikum warahmatullahi wabarakatuh. Sehat selalu.
Waalaikumsalam.
Warahmatullahi.
Thank you.
Universitas Pakuan was established on November 1st, 1980 as a continuation of Universitas Bogor or UNBO that have been run for almost 2 decades in 1980. On November 1st, 1988, Universitas Bogor or UNBO officially changed its name to be Universitas Pakuan under Pakuan Siliwangi Foundation or Yayasan Pakuan Siliwangi.
Vision: to be an excellent, independent, and characterized university. Mission: organizing a higher education in preparing human resources who are able to explore, develop, and apply sciences, technologies, and arts. Applying knowledge which is based on a wise attitude. Producing graduates who are qualified, independent, faithful, having noble character, and be patriotic.
Currently, Universitas Pakuan has 3 education programs with 6 faculties of undergraduate program, 1 graduate school for master and doctoral program, and 1 vocational school. The following are the faculties and study programs in Universitas Pakuan. Graduate schools, master programs, doctoral program, undergraduate programs, Faculty of Law, Faculty of Economy and Business, Faculty of Teachers Training and Educational Sciences, Faculty of Social and Cultural Science, Faculty of Engineering, Faculty of Mathematics and Natural Sciences, vocational schools, sporting units, facilities, academic activities, collaboration,
Universitas Pakuan is the largest private university in Bogor. It is located in the center of the town that is easy to be reached. It is accredited B by National Accreditation Board. Having good and complete facilities make the students feel comfortable in learning in Universitas Pakuan. We are very open to collaborate with local and overseas universities, industries, and NGO.
Marilah bergabung dengan 16.500 lebih mahasiswa yang sudah dan sedang belajar di Universitas Pakuan. Kita yakin dan percaya saudara bisa mengikuti kegiatan akademik dengan baik, kegiatan kemahasiswaan dengan baik, dan saya yakin Anda tidak akan kecewa untuk masuk di Universitas Pakuan.